So I'm going to try my best to explain a new product that we've just published the best I can. It's a little bit more complex than my normal products, but I'm going to do my best to actually explain what it does. So what I'm going to do is launch it from the CBOT. So I click on the little CBOT icon there. This is assuming you've downloaded it from our website and installed it. I'm just going to type in volatility and spell it wrong. Volatility beta. Okay, so it was beta, it's gone full release now, so ignore the beta bit. Okay, when it starts, just click next to go through the welcome screen. This just does a license verification at the same time. Now this is the window you're going to see. I'll go through each feature individually and explain what it does. Actually, I'm going to quickly explain what it does. So first of all, what this tool does, this captures market events when there's high volatility on a symbol. So things like high impact news releases or events in the world that all of a sudden cause the price of an asset or a symbol to move like 100 pips or even up to 1,000 pips. So a massive movement in price. What causes these movements is the speed at which the price moves. So this tool here will actually calculate on a short-term time frame. So it's good at calculating as the move starts over 1 minute. I'll explain how it works. So first thing you've got on here on this chart, on this window, sorry, is this gauge here. And I'm going to turn it on and you'll see that it's gone up to say bull there. It's only saying bull because at the moment I've got it down as a volatility trigger as 3. What that means is that the actual volatility is calculated on a 1 minute candle, and it calculates the high price and the low price and how much movement has happened in 1 minute. So the larger the bar, so an example would be this long green bar here, if you can see it. A long bar like this is a lot of volatility. So it would have calculated the high price and the low price of this candle, and it would have worked out there was a lot of volatility going on. The faster it moves, the higher the value goes. So that's your volatility trigger. That's what triggers the alert. Secondly, you've got price ticks. Now price ticks calculates the direction of the volatility. So if it's a bullish one like here, 10 price ticks means there's got to be 10 price ticks that have come in. So each time there's a price change, and each one has to be greater than the previous one because it's 10 for it to be a bullish signal. If each one was less than the previous one, and there was 10 of them, it would be a bearish signal. Now you can configure these values to suit the style of trading you're doing. If you're doing short-term scalping, you might want lower values. And if you're doing long movements on high impact news releases or major market events, you have it on a higher value. Now, what this does is 3 things we've got on here, 3 tools. The most useful part of it is the winning positions and losing positions you've got down here. So the whole idea is you've got automated robots running, or you've got open positions, and you want to protect those positions when a market event happens. At the moment, we have the news release manager that most of our automated trading systems use, but you might not have that ability to use that. So you might have an open position, it might have a stop loss, or you might not have a stop loss. So what you want to do is you want to actually attach a trailing stop to any winning positions. So what this does, if I look over to where on the left-hand side where it says winning positions, if you had a market event happened and the price rapidly went bullish, if you had any buy positions and those buy positions were in profit, it will actually attach a trailing stop to them. Okay. So what the trailing stop will do, as the price keeps moving up, so in this scenario, I'll go back to this long green bar. In this event here, if the price kept moving upwards, it would trigger a trailing stop after 5 pips, and it will trail 2 pips behind the price of the instrument until the point where it retraces back 2 pips because it's trailing, and then it closes the position. So the whole idea of this feature, the winning positions, is to chase the trend with a position which is open in the same direction that the trend is going. Okay, if it was a sell position, it wouldn't attach a trailing stop. If you use this feature over to the right hand side, it says losing positions. You can close all positions that you've got open when the price starts moving in a bullish trend. So if you had a large volatility there, say you set the trigger to 10 and there was say 10 or 15 price ticks, so it's a solid trend direction, you could, before it hits the stop loss, you could close that sell position. This would be experimental. You'd have to try it out with different values and different types of movements. But the idea is if large amounts of volatility starts happening, you get out, you close your position and you take your losses. You can also attach a stop loss to any position that doesn't have a stop loss. An example would be you have some positions open, and this has happened to a lot of traders. They don't have a stop loss. A market event occurs that isn't a news release, could be something completely different, and the markets move so rapidly in one direction against your position that it blows your account. It completely empties your account. You've lost all your money. So this is a fail-safe way of covering yourself against unpredictable market events. And there's a lot of tools out there with risk management that help you with all sorts of scenarios. But one of the scenarios in the market that most people don't get protected by, and that's rapid volatility or large price movements. So sometimes I'm supposed this would be very good for you. Other times it might close your position when it might not have. But in the long run, hopefully it will actually protect your account better off really. Okay, that's that. So the other thing I wanted to show you is up here where you've got the submit order. Now we've added that bit here to help traders do a little bit of scalping. So an example would be if I bring this down, this is just an example, something low like 3, and bring this down to 3. You can see now it's saying bear and the price is bear. If you look at the candle, it's starting to come down in red. So on shorter price movements, you can adjust these values and it will actually reflect what's happening in the candle itself on the price action. It will show that if it's, if it's a bearish candle. So if you want to do short-term scalping, you can actually use this, set it to a value that you want to use, so maybe 4.4, and then you can obviously experiment with different values, but the idea is you want to find out which direction the trend's going to find out if it's going, if you want to trade. So this is what I'm looking at now. I'm seeing if it's coming up with a buy. We've got volatility of 4. It's gone into bullish now. You see it's clicked on bullish and it's a bit of a bullish candle. So again, the idea is to experiment with it. It's a little bit experimental. The idea and what I plan to do is we've currently got a Telegram chat group, and our customers are actually going to use this and provide feedback to improve the system. So it's going to evolve organically. So hopefully we're going to get a tool that everybody can use, and it is a very useful tool to use. Okay, that's all I wanted to show you. And if you are interested in actually using the software, I'll bring it over here. This is our website. It's clickalgo.com. Just come to our website. At the moment, it's under here. We're selling it at $19.99 at the moment, but you can find it. You'll find it on the website easy enough. So if you click on there, you can scroll down, find out more about the information on here. We're going to add, or I'm going to add a complete support page or user manual to use. This video will go in here, and you've got a help desk support ticket and other stuff to help you out. Anyway, that's all I want to show you. So that's it. If you do like the video, please give me a thumbs up at the bottom, and you subscribe to our YouTube channel. Sorry, you can subscribe to our YouTube channel, and you can be informed whenever we have new updates and stuff like that. Okay, thank you very much.